So Chris never gave me the option of doing it by video, and obviously coming down as a regulator to talk to a group of geologists at 6 o'clock, and the bar's been open since 5, makes me somewhat of a brave regulator. And you can always tell when you're in the Irish Club, because it's the only place in the world where your feet stick to the floor and you're in the theatre room, not even in the bar. Anyway, move on. So I'm going to talk to you today about what ASX has been going through in the since March and our response to COVID. Chris is going to talk to you about JORC-related issues. It's pretty much a two-part talk, and happy to take questions as we go. So these are a couple of things we're going to talk about, and we'll go through them. And as I say, happy to take questions. So we always start these presentations by really talking about where Australia sits in the world, where ASX sits in the world. And to many of you, this slide might be a surprise, probably not. But by way of global pensions, Australia's fourth in the world. And it's forecast, and that's sitting at around $2.1 trillion, and that's money which is in pension funds, which is coming out in the form of investment. So that's really a snapshot of the drivers behind our market and similar markets to us. And certainly the pension funds, super funds in Australia punch above their weight. This is a study which was undertaken in November 2019. You'll see that it's forecast by 2038, now many of you to be around $10 trillion. Many of you who've lived through the financial forecasting requirements of the JORC code will no doubt raise issue with me about saying financial forecast going out to 2038. Anyway. And this is just to give you a snapshot of what happened last year and where ASX sat in terms of capital raise, sat in terms of new listings. And you'll see that by way of new listings, we're one of the most active exchanges in the world by way of volume. We had 92 listings last year. Many of you who are doing the reports for companies at the moment will know that there's a very long pipe of IPOs to come, and obviously you all know that many of them are mainly in the resources space. So certainly we are seeing an increased level of IPO activity for this calendar year, and I'm sure many of you are actually actively involved in drafting a lot of the reports. And this is really a breakdown of the market by way of market cap, just to give you a bit of a perspective on where the companies sit. So there's 2,200 companies listed on the ASX. There's 286 of them, give or take, with a market cap over $1 billion. In Western Australia, we have about 750 companies, and obviously because we've got the large majority of explorers here, those companies tend to sit in that sub 10 million or 10 to 50 million bracket. That's where you find the explorers. And this is just a breakdown by number of companies. And if you've seen this slide before, you'll know that far and away the resources sector is the largest sector by number. It makes up 40%. You might not be aware that IT and communication services, that actually makes up the second highest by way of number, so that's 14%. And not surprisingly, in the market cap sector, you'll see that the financials, the banks, make up 20% and resources about 19%. Many of you will say, but what about BHP and how Rowe work? Remember, they're dual listed, but in two different, in the UK, so that actually doesn't count. And then we've got an actual breakdown of the resources sector itself, and not surprisingly, 50% are in the diversified metals and mining. So this is our largest sector. There's 750 companies in the sector, and there's over 80 countries where those companies operate. And then you can see the resources sector compared to the oil and gas. It's significantly bigger. And this is really, this is quite an important slide for us because this sort of shows you where the footprint of Australian resource companies is, and you see it's very much a global presence. And obviously a lot of you already know this because a lot of you are doing reports in these other where they come from other countries. And of course, it's not just that the resource companies are conducting activity in foreign jurisdictions. It's also resource companies attracting capital from foreign jurisdictions. And for us, this is why the reputation of the ASX is so important, because it attracts capital. This is just a slight divergence to our second largest sector, just to give you a flavour of what else is going on. And obviously we are seeing a lot of tech developments in the resource space as well. So it's our fastest growing sector, it's our second largest sector, and there are now 26 tech unicorns. A unicorn is a company with a market cap greater than $1 billion, and so we've got now 26 of them. It has been a focus of ASX in the last couple of years. So much so that we've actually introduced a technology index, and you can see how it's performed compared to the All Ords, to the ASX 300. Sorry. And this is just a snapshot of the capital raised by companies since 2009 to date, compared to the technology companies. So the darker line doesn't quite come out. The darker line is the secondary capital raise, and the lighter is the IPOs. Many of you would have been around in 2009 and remember just how busy 2009 was. And certainly the number of secondary raisings and IPOs. While the numbers might be different, it very much has that feel about it at the moment, though, in terms of just the sheer levels of work at the moment. And so the 2020, really, sorry, it's a bit blurred. The 2020, that really is, to date. There's quite a while to go. So now I want to talk to you about what actually happened in March this year. So this is how the market reacted to COVID, and you'll see from this slide that on March 13th, I think there were 7 million trades registered in CHESS, and that's 122% on the previous highs. 224 million futures traded, over 1,500 market surveillance alerts, and $169 billion worth of bonds were traded. So you can see where COVID appears relative to other previous records on the ASX. But this slide is actually a little bit more telling. So this slide shows you that the activity and volatility experienced in March and April 2020 made the tech bubble, the GFC and Brexit, they look like blips. If you just look at the chart, you'll see where they do look like blips on the chart. So on the 20th of February, the market hit an all-time high of 7,162 points. So that's the all-time high. 14 days later, on the 11th of March, we officially entered into a bear market because we were down 20%. That's the fastest bear market in history. 8 trading days later, the market bottomed out at 4,546 points. So that's a fall of over 36%. 14 days later again, we entered into a bull market, and that's 20% above the low. And that's the fastest bull market we've had in history. So, and all of this happened while all of us are working from home. So ASIC published a report during this period on retail trading over that period. You can download it from the ASIC's website, but it's really interesting to see that there was over 140,000 new retail accounts activated and a similar number of dormant accounts reactivated in that period. And so you'll also see that, proudly, the ASX was up 100% of the time. We had our 8 out of 10 largest intraday trading ranges, and 31 billion in secondary capital was raised, and 3.6 million visitors to our website in March 20. Also in that period, ASIC introduced what was called a trade cap directive. So on the 13th of March, peak activity was around $21 billion, and there were 7 million trades. So prior to that, it had been about 5 billion and about 1.5 million trades. So this is unprecedented level of activity. So what ASIC did by this trade count cap directive was they placed a limit on the number of trades by the 9 largest participants. So what they did was that limited the trading they'd limit their trades by about 25% to keep the systems functional. And what that was doing was, by and large, putting a cap on the high frequency trading. And it was to manage the volumes. And that trade directive was revoked in May 2020. So I've pretty well spoken about these stats. Really interesting, in February 2020, we saw a new monthly record in market announcements, 11,327 markets announcements during that period, and 4,000 of them were price sensitive. Quite a few of them were in the JORC space. Chris can talk to you about that. So in March, obviously we were conscious that what was going on in the markets, and ASX, together with the Business Law Council, the ECM desk, ASIC, the Treasury, the RBA, we were discussing what was going on with the markets, and ASX provided a package of relief and updated guidance to assist listed companies to raise capital and manage their disclosure obligations. So it was all designed to help investors stay informed. So the measures included a temporary emergency capital raising measure, and that enabled companies to raise urgent capital, and also required a follow-on offer to allow retail participants to participate, usually by way of a rights issue or an SPP. We gave practical guidance on managing your disclosure obligations, including earnings guidance and decisions not to pay a dividend. You would have seen a number of companies make those sorts of announcements during that period. We gave support to ASIC's position in relation to no action position in relation to AGMs and financial reporting, and we provided some relief to marry up with what was happening in New Zealand. So for those of you who follow what ASX is doing, we release listed companies updates. You can subscribe to them on our website. I really would encourage you to do them. We have done a number of these over the years which are JORC related, but also generally what's going on in the market. So one of the most important ones you can read is the one we released on 31 March 2020, and that gave guidance on continuous disclosure. We had to remind people to give us the information first under Listing Rule 15.7. We went through our capital raising, emergency capital raising relief measures, and about considering case-by-case requests for reporting relief. That's now actually been superseded by ASIC's financial reporting relief. We gave guidance that we wouldn't change or grant relief for companies which were long-term suspended. And we also gave information about our enforcement activities in connection with misleading COVID announcements. You'll recall there were quite a number of companies which thought they had cures to the COVID-19 virus and were making announcements which were suggestive of that, and we took a number of them to task on that, and generally released our correspondence to those companies on the website. I won't go through this in great detail, but we issued guidance on for earnings guidance. So that was where, and a lot of entities were withdrawing guidance. You'll see now that companies are actually starting to reinstate the guidance. Where there are material operating decisions, for instance, there were some markets which were affected greater than others, if you think what was going on in the travel industry. And of course, entities in financial difficulty, we gave guidance in relation to that. And we also gave guidance in relation to decisions not to pay a dividend, which a number of companies make disclosure about that. In terms of the emergency temporary capital raising measures, the major change was in terms of placements. So we gave an uplift to our 15% placement capacity under Listing Rule 7.1. We lifted it up to 25%, but it was subject to there being a follow-on pro rata entitlement offer on SPP. So if you want to go into it, the variable B increased to 25% rather than 15%. We allowed for a single use, and it had to be made in conjunction with a pro rata offer or a SPP price. And we've revised that a number of times. We also did temporary relief in relation to rights issues. This is called the expanded capacity waiver. It's an upsizing waiver. It enables you to take your placement capacity can be upsized by the number of shares issued through a pro rata offer through your placement, through your rights issue. And we also gave relief in relation to the 1-for-1 ratio in relation to non-renounceable offers. We introduced back-to-back trading halts, well, 4-day back-to-back trading halts for capital raisings, which has been, there's been quite an uptake on that, but they are only for capital raisings. So a lot of people have actually asked us for a 4-day trading halt in relation to an acquisition. That's not how it works. It's only in relation to capital raisings. And we changed, we granted a class waiver in relation to SPPs. So with an SPP, the number of securities couldn't be greater than 30% of the number of orders already on issue, and the issue price couldn't be less than, had to be at least 80% of the VWAP. Through our class waiver relief, we waived those requirements, provided the SPP occurs at the same price as a placement carried on at the same time. So in other words, it's about dealing the retail investors in. Really, the main thing to bear in mind here is that the temporary emergency capital raising measures, it had to be a correlation with COVID-19. So it had to be about the health crisis and how that was impacting on the company's finances. So it wasn't for, and isn't for, companies to go and make acquisitions. It's to really about strengthening your balance sheet. So we've again released listed companies update, reiterating our position in relation to that. It's certainly not for acquisitions, and generally speaking, the rate of use of the capital raising, emergency capital raising measures shot up at the very beginning and now has sort of peaked and is really, it's teetering off. So what was the reaction to the market? This is follow-on capital raised by the exchange, and this is March to June, and you probably can't see that, but if you look at March to June, in amount of capital raised on ASX, it was US 20 billion, the NASDAQ was 63 billion, but just look at the number of deals, the number of deals which were going on ASX, and you'll see that it was a significant number of deals which were occurred on ASX during that period. More capital was, there were more capital raising transactions on ASX than any other exchange during that period. And this is just really a snapshot of where we're sitting in relation to the amounts of capital raised from 2016 to 2020. And you can see that in terms of secondary raising, this financial year 20, it was around 70 billion, and IPOs was around 27 million. I won't go into the futures contracts. And this is just a snapshot of over a 3-year period, where we sit in terms of IPOs and follow-on capital and the amounts of capital raised. So in terms of number of deals over a 3-year period, you'll see the number of deals, that's the blue line, the light blue line. Again, far exceeding all the other comparable exchanges. In terms of capital raised, it's $28 billion, so it's quite a significant amount. we certainly lead the world by number of resource IPOs and follow-on capitals raised over the last 3 years. And this is quite an interesting one because this is really about the ASX resources sector, and this is the follow-on capital raised. During that period, up until August, it's around $7 billion has been raised by the resource companies, and that's largely been dominated by number with the juniors. So 85% of the raises of that $7 billion have been going to have been done by companies with less than 100 million market cap. So quite significant number of resource companies, over 300, have raised capital during that period. This is just another way of looking at the slide, just setting out the following capital and the number of the market cap of the company. So that's it for me. Did anyone have any questions on what I've spoken on?
It's just a curiosity. Is there that bear market and bull market behavior that you were talking in March? Is there a similar trend in other bigger markets like US, UK? The trend was similar? It's just a curiosity.
I don't know. I imagine, though, they probably had similar reactions. It would be unusual for one to react and not the others.
My question's around the Hong Kong Stock Exchange. You had that up earlier. It was the second biggest after the NASDAQ. And I'm just wondering what's happening with that now with what's going on with China. My remit is running the Perth office of the ASX, so I really don't focus on what's going on in Hong Kong. I couldn't tell you, sorry.
James, you just mentioned that you're only interested, you said you run the Perth office of the ASX. How many months have you been running the Perth office of the ASX from home? And do you find it easier running it from home, which you have done for the last 6 months, compared to the last however many years in an office?
So this is I started in the ASX in 2006, so I've been the state manager now for, 14 years. 14 years this month. And I would have to say this has been the most challenging time during that period. ASX transitioned seamlessly over one weekend, and we're really proud of the fact that we were able to do that, and we had 100% of our systems up and running. So by and large, the compliance team nationally is running from home. We've got 4 or 6 people in the office. We've had new starters come in and actually start them during this period, which has been testing. As anyone who manages people will know, that it takes a lot of energy to run a team when you're all face-to-face. It takes twice as much energy to run a team when you're doing it remotely. So it has its challenges, and we're pretty proud of the way we've done it. Still here, so it has been challenging though, Chris. Ivy.
Are you finding that the pattern or the type of disclosures that you and your team encounter are different pre and post-COVID? Has the pandemic made any difference to the style of disclosure or the quality of disclosure?
So not so much the style, but we have seen shifts in quality in that we're seeing a lot of companies making disclosures where they haven't had a third-party input into it. So in the JORC space, you'll see some disclosures which basic things are missing, competent person statement, or things regarding expiration targets, those sorts of things. And when you ring the the people involved with it, that, you know, it's like it's the first time they've ever heard about it. So, we are seeing things like that, and we are seeing announcements, not so much in the JORC space, but announcements in relation to acquisitions of assets, and those assets have JORC results. We have FAQs which talk about how you go and disclose that, and it's not uncommon for people to raise it, to give us a draft announcement, and they haven't turned their minds to the FAQs, and we're quite surprised by that, because they're very significant transactions, and we would have thought the disclosure of these things up front is pretty important. And the feeling we get is that it's because they're not using third parties to the same extent that they were before. So they don't appear to be using consultants. They don't appear to be using the lawyers as much as they were. I mean, this is the minority, but it's still problematic. And not in the JORC space, but our old favourite, naming names is still still appearing. People not providing any details on the counterparty. So business as usual, but we are seeing what does appear to be less use of a third party to validate it.
Yeah, related to Ivy's question, will the ASX be taking a more lenient approach because of the inability to take more third-party advice who possibly would have done this work before?
I mean, the market trades on the quality of the information put to it, so there's no excuse for poor quality. So the answer is no. There are fundamental elements of disclosure which you must make, and if an entity fails to disclose those fundamental elements, the main one which Chris and I see a lot of is still scoping studies. If we see a failure to make disclosure in relation to the minimum standards we would expect, by and large we won't let the company trade until that disclosure is made. And very quickly they engage with the consultants on that, very, very quickly. So, there's an expression about a penny saved, so the answer is no, and we couldn't perform our function if we were to be lenient on that. There are some disclosures which you would understand, which really doesn't matter, that. For 10 announcements, the company has said inferred resource X. Then in a 11th announcement, they just say the resource and leave out the inferred, but it's coupled, but it can be found elsewhere. That might be not so much lenient, but just told don't do it again, by and large. And those sorts of things which don't really matter in the context of the company and what's been disclosed. We have a practical solution for dealing with those sorts of things.
Yeah, I was just wondering, while we're on the subject of coronavirus, and you obviously running the Perth office, are you seeing a big difference between the activity that's going on in the West Australian domain and the activity that's going on in the Victorian domain? And is the Victorian branch of the ASX still functioning, and are Melbourne
Yes.
domiciled companies still functioning, or are they just sort of gone to sleep?
No. Our office is we have quite an active office in Melbourne. There are quite a number of resource companies based out of Melbourne. We haven't seen that at all. So if you look at the level, I don't have the split to show you where the capital raisings where they're actually occurring, but my understanding is it's occurring nationally. I've just focused on the resource sector for here. So their experiences are similar to our experiences. We actually operate as a national team. So I have an equivalent in Melbourne and Sydney. But what COVID has taught us is that, you know, we really are one team, and as such, you know, our first collective meeting in the morning is, I'm going to get this wrong, Chris, is at, now it's at 6:30 a.m. in the morning. So we all meet, and very much, again, just after market close every day. So COVID's made us closer together, if for want of a bit of expression.
Do you want to move on to Chris?
Yeah. Okay. I'll stick around, and so if you've got any other questions, please fire away.
Thanks, James. So I'll try and keep this reasonably brief. A lot of these issues would be familiar to people over the last couple of years. Those sort of ongoing issues that we've been dealing with in the market, and rather than try and give a broad coverage of the JORC disclosure, I'll sort of try and pick out a few of the interesting ones and have a bit of a chat on how we deal with that disclosure under the listing rules and the JORC code. So visual results is a big one, and we're seeing more of this, particularly with companies drilling nickel sulfides. Again, we're seeing a lot of reporting of material results when they're hitting nickel sulfides, and years ago ASX did actually add some guidance in ASX guidance note 8 around the reporting of visual estimates, and the advice generally is to avoid reporting visual estimates in advance of analytical results, so valid assay results, on the basis that they're generally insufficiently definite to warrant disclosure. And in particular, a key point is it's inappropriate to make comments about the grade and quality of mineralisation in advance of assay results. I know ARG put out some specific guidance a couple of years ago, and I know AusIMM has also touched on this. So the advice we give to companies in reporting visual results, it comes down to those key requirements of the JORC code in transparency and materiality. So it's providing the context of those results. And in terms of JORC reporting, we want to see a competent person statement. The sections 1 and 2 of JORC Table 1, and in terms of the context of what's being reported, it's describing the nature of the minerals, an assessment of the abundance of those minerals, and making it clear in the market disclosure is the uncertainty of those results. These are just a few examples. So over the last few years, we've seen sulfides, we've seen visual results of lithium pegmatites, graphite, reporting of outcrop samples, so things like gossans, massive sulfides, they all come under that broad brush of visual estimates. And this is going back to 2018, but a prime example of that visual reporting is gold nuggets. So when this was all happening back in late 2017, early 2018, we had a lot of issues with companies arguing the point that it doesn't say gold nuggets in the JORC code, so it's not an exploration result. But clearly, a discovery of a mineral occurrence, being gold in this case, is clearly an exploration result, and again, you need those key requirements of transparency, competent person statement, your Table 1 commentary, and some discussion by the competent person to provide the context to those nugget discoveries. Was it a bunch of watermelon seed nuggets in a conglomerate, or was it just a patch of nuggets in a supergene patch somewhere? It's that key requirement of transparent disclosure. Another big issue we've seen this has been going on for a couple of years, is metallurgical test work. and reporting of metallurgical test work. And again, to emphasise that point, the key requirement is that any metallurgical results of metallurgical test work, beneficiation, mineralogical studies, we need to see some reasonable sign off by a competent person and some transparent discussion of, for example, sample locations, a description of what samples were actually analysed, the volume weight of those samples, and that context to the mineral occurrence, the resource or the reserve that the company is reporting against. Metallurgical test work results are specifically listed in JORC Table 1. And the final point, they're fundamental to any reporting going forward in terms of being a modifying factor for resource and reserves, and particularly in reporting metal equivalents for polymetallic deposits. And I'll briefly touch on resource and reserve reporting. Generally, reporting of resource and reserves, the Table 1 requirements are quite well understood, and companies are quite good at covering off on the Table 1 commentary. But another key requirement under the listing rules is for a discussion of those prescribed parameters from the JORC Table 1 actually in the market announcement as well. So it's a brief discussion of the key points in terms of classification of a resource and a reserve need to be included in the body of the market announcement as well as the Table 1 commentary. And some other key considerations which we've seen, and I'll briefly touch on, is reporting of stockpiles, dumps, tailings. It's potentially mineralised material which is actually captured by the JORC code. So any report of tonnage, grade, production of stockpile or waste material is actually captured by the JORC code. So you can't go out and report an estimate of tonnes or grade, or potential production of material that hasn't yet been classified as a resource or a reserve under the JORC code. Another one is industrial minerals, which I won't go into too much detail, but with the rise of minerals such as graphite and other industrial minerals, which are defined by a specification, Clause 49 of the JORC code requires a description of that mineral specification in any estimate of resource and reserves for industrial minerals. James mentioned the ASX mining reporting FAQs. These were originally brought in the transition from JORC code 2004 to the current JORC 2012 requirements. And they were recently updated, I think it was 2017, mid-2017, to include some allowances for announcements of material acquisitions and takeover documents where companies are acquiring information that's potentially wasn't originally reported at a JORC 2012 standard, but allowing for the continuous disclosure requirement under the listing rules, that material information needs to be reported ahead of the time it may take to bring it up to the current reporting standards. And as James also mentioned, a key problem we're seeing recently is that in terms of reporting historic results is if it's reporting an historic result outside of an acquisition, companies can't rely on that carve out to report historic results. So any reporting of a historic result outside of an acquisition and the continuous disclosure requirement needs to be brought up to JORC 2012 standards. Prospectuses, this is a big one we're seeing recently with the sheer volume of mining prospectuses. And the key point is the last point, in that any JORC-related exploration or mining information in a prospectus needs to be compliant with the current reporting standards when it's released to the market. So there's no carve-out for historic results or historic estimates in a prospectus. It needs to be reported to a fully compliant standard at the time that information is reported to the market. That's really the key point I want to make there. And the final point is scoping studies. So back in late 2016, ASX, in conjunction with ASIC, published an interim guide on scoping study disclosures, and this covered off on the key disclosure requirements of production targets and financial forecasts, and the key requirements for disclosure of that information under the ASX listing rules and the Corporations Act. And so some of the key points here is ensuring that, and this is a key requirement in terms of ASIC Regulatory Guide 170 and Information Sheet 214, is that any forward-looking statements, so any estimate of production or financial forecast, needs to be based on reasonable grounds. And a key one that companies trip up on is significant proportions of inferred, which under the corporations, under the ASIC regulation, significant proportions of inferred prevent companies from having a reasonable basis for forward-looking statements. So the key one is you can't report a production target or a financial forecast on a 100% inferred resource. We're starting to see some issues with dual-listed entities. So on the TSX, for example, you can report a PEA on 100% inferred resources, but there's no allowance on the ASX under our regulatory regime to report that information. I might leave it there. And
yeah, just you're talking about that you're no longer accepting historical estimates under JORC 2004, and they should all be updated to 2012. It's my understanding that the Chapter 5 still references directly the JORC 2004 requirements, and there isn't any requirement yet to go to JORC 2012 if it hasn't materially changed. Is that correct?
So you're talking about Section 512 of the listing rules. Section 512 of the listing rules allows for historical reporting of exploration of resources and reserves. It does not apply to exploration results.
Yeah.
So the exploration results are not covered by Listing Rule 512. They're covered in the FAQ, and the FAQ facilitates the disclosure of pre-2012 exploration results.
But my understanding is that it's JORC 2004 that is still the appendix to the listing rules.
No, chapter Appendix 5A is JORC 2012.
Hi guys. Just a quick query. With the JORC code under review at the moment and probably a 2021 JORC code coming out, will there be a revision to the listing rules Chapter 5 as well?
So we're not. So I'm ASX's representative on the JORC code, on the JORC committee. I can't speak on the JORC 2020. Members of the executive can, and I can't see any in the room. I can't speak on that. But obviously we're across what they're doing. For us, the bigger issue for us at the moment is that if you're a practitioner in this space, you will know that to get a JORC report right, you need to be across the following. You can write this down. Chapter 5 of the listing rules. Chapter 5 of the listing rules, guides note 31, the FAQs, the interim scoping study guide, IS 214 and RG 170. There's
1, 112.
Sorry?
And 111 and 112.
Thank you, Ivy. So for us, it's about pulling it all together so that it is in one shop. Our scoping study guide is the interim scoping study guide. So by that you would take, we're going to do a final version. When we've spoken to people about it, most feedback we get is it's working. It actually works. There was a bit of a hiccup with IS 214, but that's an ASIC issue. The feedback we're getting is that the interim scoping study actually does provide a framework for people to make the disclosure. But one of our priorities, Chris's priorities, is to bring it all into one document.
Yeah, I've got a couple of questions. Few companies out there will be reporting ROM stockpiles.
Yeah.
It's my understanding that certainly falls underneath JORC requirements. And I have noticed there's a few companies out there that do report ROM stockpiles and contain gold without all JORC Table 1s. I guess it's more of a comment rather than asking you guys to actually comment on or point anything there. But
we're happy to engage with you on details further.
The other ones are eventual economic extraction. For some commodities, it is, while it's in the JORC code that it actually does talk about extended timeframes, there's a couple of commodities out there that I think some people in the room would certainly understand and know. One would be magnetite type resources, which are probably never going to be economic here, not least while the Pilbara's sitting there. And the other one would be, say, uranium deposits, where in Queensland or in New South Wales or WA, where it is against the regulations to actually mine it, how are companies getting around and how's ASX getting around eventual economic extraction assessments in that regard?
Well, the short answer is it's outside of our remit to we can't be making that assessment as the market operator. So it's really down to the competent person signing off on the information, and the step back from that is the professional bodies regulating those competent persons.
So we regulate what's disclosed, as opposed to we don't regulate the how.
Yeah. It's a big task to be making that call as the market operator.
Yeah, I guess it's sort of mixed into that IS 214 scoping study type announcements that do get made, which I know you obviously do pick up companies where there's some questions around the reasonableness of the inputs.
Yeah.
So it's just, I guess, juggling that. How does ASX juggle those competing positions? It's a tough one. It's probably a rhetorical question, really.
Yes, and I'm still wearing the hat because I'm still worried about PSC. Look, thank you very much, James and Chris, for coming along and giving quite an interesting talk, and also a forecast about when the next, the sweepstake about which year the next JORC edition comes out is still open, I think, isn't it? Hey? Yes, and there's an educated shrug of the shoulders over there.
I'm not on the JORC committee.
I know you're not. Anyway, but seriously, look, thank you very much for coming along to this first face-to-face. We'll be back here again on the second Monday of November with autonomous trucks, and then on the 14th of December for the AGM at 5:30, followed by board governance at 6 o'clock. And just before we close, there is an election for board directors is still open till the end of the month. if you haven't voted already, please vote because in the past of the 13,000 members, there's been quite a low turnout in people voting, and we really should all vote. Okay, and so once again, thank you all for coming tonight, and I think it's really gone well, and thank goodness we've actually been able to swap venues without losing. Although I still worry about whether there's someone pounding on the door of the Celtic Club. but probably, maybe not. Anyway, but thank you once again for coming along, and thank you, James and Chris, for actually persevering with us and coming along to give us a briefing. Even if you are working, and I'm surprised you didn't bring your dog or something with you while you came.
Chris is referring to the dogs we had at the beginning of the